Let's get deep into the crypto markets with Innovating Capital General Partner Anthony Georgiades. Welcome, Anthony. Welcome back, actually.
Great to be here.
Good seeing you again. Okay, so Bitcoin went past 25,000. It was below there, now above 25.7 or so. It had a little bit of a bump because of the iShares news. That BlackRock was filing paperwork to start an ETF. Is the market just kind of like searching for any positive, anything that it could grab on? I mean, let's face it, these ETFs don't really do much for the price of Bitcoin, do they?
Well, depending on the type of product, right? A lot of the synthetics that we've seen in the market, historically speaking, haven't necessarily been spot settled. So, to your point, there hasn't actually been a dramatic impact on the actual price or demand for crypto. But with some of these newer products that are emerging that are spot and cash settled, they will actually have an impact on the price of Bitcoin. But, I think more generally speaking, to your broader point, the market seems to really be hanging on and grasping for any glimpse of positive news. There's obviously been a wave of uncertainty from the regulatory sphere over the last couple of weeks that's cast a large doubt in terms of the future of crypto. You've seen firms like Andreessen Horowitz deciding to move a lot of their onshore activities offshore. That's obviously spiked some fear and concern for US-based entities, US-based funds, and US-based projects. But I think right now you're seeing a bit more clarity with respect to monetary policy from the Fed this week. And, while there was a bit of good news with bad news in terms of, as the market expected, a pause in rate hikes, but there would be a continuation of rate hikes in the future. I think that the certainty of the news being delivered has given the market a little bit, not just crypto speaking, but broader equities and whatnot, some room for comfort in terms of we know what's happening and we can adequately price it in.
Yeah, yet it seems almost like there are two different conversations going on with when it comes to what the Fed is going to do. Because when I look at the bond market says the Fed is definitely going to raise rates a couple of more times, at least, or at least 50 basis points by the end of the year. And it's kind of reflecting somewhat what we see with the dot plots. When we look at the equity markets says the bond market, the equity markets are like, we're not buying this. The Fed they're done. This isn't just a skip. It's a pause, and that's it. Nobody's the economy is just going to be so bad, and the Fed's going to wake up next month and go, oh my God, this is horrible. We can't raise rates again. So who's winning out here? Because it looked like crypto was kind of following the bond market for a while, and then all of a sudden, with the BlackRock news, it started to reflect more like the stock market. So, which is going to win out in the end?
Right. Just historically speaking, you're always better off positioning yourself in terms of the bond market. It's proven to be correct time and time again. At least over some of these uncertain predictions. Now, I do think one aspect of this that the equity market, is obviously potentially not pricing in enough rate hikes moving forward. The current pause is substantial because it's not necessarily always just the quote unquote terminal rate that we're targeting or the velocity of rate hikes themselves, but really that accumulated weight of those rate increases over time. And because we have actually paused and have not hiked right now, that weight has potentially subsided a bit and provided some relaxation in some of those previous assumptions that the equity markets had, hence some of the rally that we've seen over the last few weeks. And frankly speaking, right now you've had obviously a lot of forced buyings. There's a ton of options that are expiring today. They call it kind of like the triple witching OPEX. And, effectively, we're going to probably see a rollover and a bit of of volatility in today's market. And the last point is people just seem to be a little bit underinvested at this point in time.
Or it could be the Fed just trying to give everyone a breather so that they could reposition their bond portfolio. Because as I learned back in March, this isn't going well for a lot of these regional banks.
Mm-hmm. Yeah, that's definitely the case too. It's it's certainly a bit of destabilization that was induced by poor guidance from the Fed, stemming back to really November of 2021.
Let's talk about USDT. Yesterday, we saw USDT depeg, some data suggesting that traders are opting for other stable coins. Is there any cause for concern here?
There's always been, some opaqueness and this, gray cloud over USDT and its ability to support its peg over the long term. And I think more recently than anything, with respect to a lot of the both, not just regulatory uncertainty in the U.S., but the de-dollarization of the U.S. itself, I think that a lot of both retail and institutional investors are seeking and demanding different forms of stable coins, but also moving potentially away from stable coins in and of themselves, and really actually viewing Bitcoin as that pure rebasement. We've actually for the first time had a handful of different investors of ours call us and figure out how to basically convert from both stable coins to Bitcoin and then move those Bitcoins into cold storage. And to get those types of calls from these types of investors, a few years ago I would say that would be completely unprecedented. But in today's environment, again with that uncertainty, that sort of gray cloud over the market, and a lot of this fear of both recessionary concerns and de-dollarization, nothing seems to be impossible at this point in time.
So you're saying that the investors are trusting Bitcoin over the stablecoin market? In
this particular scenario, they're tapping into the pure ethos and philosophical characteristics of Bitcoin itself, something that truly is sufficiently decentralized, that is absolutely permissionless money, and a true intrinsic store of value, nothing that can be manipulated from external entities, or where trust is still a factor. What is the true supply of UST? How backed is it? And do we even need to necessarily hold the value of the dollar if we're concerned about the underlying longevity of its value?
Well, speaking of losing its value, we had a whole bunch of altcoins get slammed because of these SEC lawsuits. There were several that were named specifically in both cases. I'm talking about the Maddox and Polygons and Solanas of the world, and these aren't necessarily small little things. These are layer ones, pretty big layer ones, relatively speaking. Not as big as Ether, of course, not as big as Bitcoin. Nonetheless, these were the also-rans, the supposed ETH killers. That got named as securities. What does it mean ultimately for the alt market, for the altcoin market? Are we going to see them? Are we going to see Bitcoin and Ether's dominance gain in the long term at the expense of these smaller coins?
Well, I certainly think that that's very likely to be the case in the short term. We're seeing it already. You obviously saw a dramatic sell-off in altcoins, but very little volatility in the likes of Bitcoin and Ethereum, really for some of the reasons that you mentioned. And I think that until we get to the point, and unfortunately, this seems to really be again a case of regulation by enforcement, not necessarily clear-cut guidelines. And actually just last week as well, Congress has come out and basically guided that there needs to be some restructuring with the SEC, and that potentially the existing commissioner should not be running this entity any further, just given what's happened over the last few weeks and honestly last couple of years, the lack of clear-cut guidelines, and by just blacklisting a handful of utility coins as securities with no clear-cut guidance as to why. It's obviously going to cause a lot of both retail and institutional investors to reevaluate their holdings in these offerings. And of course, the exchanges as well. We saw forced selling from exchanges, forced selling from specific institutional funds. And I think we'll continue to see that until there's clear-cut guidance here.
Yeah, he would argue that he is giving clear-cut guidance, and that is everything's a security.
No.
All right, let's leave it on that note. Anthony, thank you very much for joining the show this morning. We hope you have a great weekend.
You as well. Thanks for having me.
Thank you.
That was Anthony Georgiades.